Hello and welcome. This is the fourth video in the series, 5 of the most used strategies to trade a trend. In the previous 3 videos, we dove deep into the MACD strategy, Bollinger Band strategy, and Supertrend strategy, all of which work great to identify strong entry points for a trade, when combined with exponential moving averages. If you have not seen those videos yet, you can find the links in the description below. Okay, but let's get back to the topic of this video, which is candlestick patterns. Firstly, let's define what a candlestick is. A candlestick is a type of chart used in technical analysis that displays the high, low, opening, and closing prices of an asset for a given time period. Candlestick charts are used to identify price trends, and can help predict future market movements. It is essential to understand different candle sizes, and how combinations of a few candles can show market behavior and indicate the next market move. Candlestick patterns are formed by a combination of multiple candlesticks, and can provide insights into the psychology of the market. There are many types of candlestick patterns, and each pattern has a unique structure that can indicate whether the market is bullish, bearish, or uncertain. Now, let's show how we can use candlestick patterns to find great entry points for trading. When analyzing candlestick patterns, traders look for specific signals or formations that can indicate a potential trend reversal. Okay, this was brief theory. Now let's divide candlestick patterns into bullish and bearish ones, and take a look at how to identify these patterns on the chart. The 3 most common bullish candlestick patterns can be identified by spotting these bullish candles. Bullish engulfing candle. The body of the green candle is bigger than the body of the previous red candle. Hammer candle, and inverted hammer candle. In all 3 patterns, you can see that there were few red candles in a row, and then a green candle came, which confirmed the bullish signal. If you want to learn more about how to identify bullish patterns, go to our website, go to Indicators and click on the Candlestick Patterns section. On the contrary, bearish candlestick patterns can be identified by spotting these bearish candles. Bearish engulfing candle. The body of the red candle is bigger than body of previous green candle. Shooting star candle. And bearish hanging man candle. In all 3 bearish patterns, you can see that there were few green candles in a row, and then a red candle came, which confirmed the bearish signal. And again, if you want to learn more about how to identify bearish patterns, go to our website, go to Indicators, and click on the Candlestick Patterns section. Now that we have learned how to identify candlestick patterns, how can they help us identify good entry points? Candlestick patterns work best when combined with other technical tools. For the purpose of this video, we will combine them with exponential moving averages, specifically EMA 200 and EMA 50. We explained how to identify trends using exponential moving averages in our previous video. You can find the link to that video in the description below, or click on the upper right corner to watch the video. So, we will use EMA 200, the blue line, and EMA 50, the orange line. Now, we have added both exponential moving averages to help us identify only strong entry points using the candlestick pattern setup. Note that in our trading setup, we want to trade with the trend. So, in the case of a bullish signal, 2 conditions need to be met. First, the orange EMA 50 line needs to be above the blue EMA 200 line, which confirms a bullish trend. Second, in a bullish trend, we are looking for bullish candlestick patterns and a continuation of the bigger bullish macro uptrend. In each bull market, there are phases when the price needs to cool down a little bit, and at the bottom of that situation, we are looking for strong bullish candlestick patterns. Here are a few examples. You can clearly see how powerful this bullish candlestick pattern setups can be in a trending market. Now, let's see how to identify this setup in a bearish trend. As mentioned before, in a bearish trend, 2 conditions also need to be met. First, the orange EMA 50 line needs to be below the blue EMA 200 line, which confirms a bearish trend. Second, in a bearish trend, you are looking for bearish candlestick patterns. In each bear market, there are phases when the price goes up and has a small bull rally. Basically, you are looking for the top of the rally, where we are looking for strong bearish candlestick patterns and a continuation of the bigger bearish macro downtrend. Here are a few examples. You can clearly see how powerful this bearish candlestick pattern setups can be in a trending market. Now that you have learned how to identify good entry points using the candlestick pattern setups, we hope you found this video informative and useful. Follow us to learn how other indicators work with exponential moving averages, and how to identify great entry points using them. If you have any questions or suggestions, please leave a comment below. Thank you for watching.